Hello and welcome to Season 2, Episode 2 of the Talking Central Banks podcast with me, Karan Medici. This platform is exclusively dedicated to everything central banking, monetary economics, and policy technicals for observers across the world. Today, we will be talking about the challenges faced by the Afghanistan Central Bank and the lessons learned during political upheaval over the last 3 decades. Arguably, the Afghan Central Bank has been undertaking an impossible and possibly the hardest job in global central banking, as it has been trying to manage persistently high inflation, rampant deficit financing, political instability, exchange rate vulnerabilities, and the tackling of multiple and counterfeit currencies circulating the system. Our guest tonight is Khan Afzal Hadawal, who was the acting governor between 2014 and 15 and the first deputy governor between 2011 and 2016 of the Afghanistan Bank. He also led Afghanistan's negotiations resulting in Afghanistan's removal from the FATF dark grey list. Hadawal is currently a senior member of experts at Institute for Development and Economic Affairs with over 2 decades of experience in Afghanistan's public and private sectors. He is also the architect of Islamic Banking and Financial Intelligence Unit in Afghanistan and played a key role in drafting the laws for banking and in Afghanistan, both Islamic banking and conventional, including anti-money laundering laws. Hadawal also served as the CEO of Bank Milli Afghan for more than 4 years, where he implemented reforms to modernize and strengthen the bank. He holds an MSc in Central Banking and Financial Regulations from the UK and a B.A and LL.B honors from the International Islamic University in Islamabad. Welcome to the show, Afzal.
Thank you very much, Mr. Karan, for
You're very
having me.
welcome. You're very welcome.
It's a pleasure
So,
to be.
Rahul, can you start by talking about the conduct of monetary policy before and after the 2001 invasion? What changed majorly, in your opinion?
Bismillah Rahman Rahim. Before 2001, US invasion or collapse of Taliban, which took place after September 9/11, Afghanistan economic system uh, was facing not only turbulence but also huge challenges. Civil war, and before the civil war, Russian invasion, and before Russian invasion, also we had some political instability. The Afghan economy has been gone through all these difficult era and faced a lot of challenges. What happened in before 1980, Afghan economy was somehow stable, although it was not what the Afghanistan needed. It was still an import-based country, but it was moving towards self-dependency. It was moving into a production, and it was moving to increase the self-dependency and decrease the import base dependence of Afghanistan. But in 1980, when Russian invaded Afghanistan, it turns out to be very difficult to maintain all those objectives. Central bank was even at that time not a fully functional central bank. Banking sector was there with very limited functions, with basic services. Afghanistan did not have complete or at least comprehensive financial sector equipped with modern tools, capital market, equity market, stock exchange, money markets, in many other pillars, the basic pillars of the financial sector was not in country. Uh, but they did have before 1980 the plan, and they were moving towards creating these pillars. But all of a sudden, the Russian invasion and the internal conflict not only stopped but took back all those little development that even they made into almost to a zero. The currency, the monetary policy was disturbed, and unfortunately, central bank turned to be the financier of the government, not only for the budget, but also for the war. They started printing money, issuing money without any economic variance, no monetary policy, no concept of exchange rate stability, and no idea of price stability. So they started, unfortunately, printing and issuance of currency uncontrolled, without any economic backup, which led into a superinflation in the country. And this continued. But still, somehow, although there was a superinflation, but somehow the structure of the banks in the central bank at least was there. Uh, After the collapse of the government in 1992, when Mujahideen took over Afghanistan and the civil war started, this was the unfortunate and unforgettable pain for not only the central bank and the banking sector of Afghanistan, but for the entire nation. Because we will stick here into the economy, into the banking sector and the monetary policy.
Right.
Unfortunately, the government not only was split, but the warlords were empowered, and then everyone had their own territory. Everyone was ruling like a different state, and not only stopping here, but they moved into printing currency for themselves. So this was the painful era that started in Afghanistan. Faced superinflation these days. Trillions of currency were in circulation. We will discuss this later when we come into the reform. We would
Mm.
like more than 19 trillion Afghani work from just what the government issued were collected, and then there were warlords they collected, and then there was, of course, other groups that they printed the currency. So this, I mean, the before 2001, there were no central bank, functioning central bank, and there were no monetary policy, unfortunately. But after 2001, when US invaded Afghanistan, and then a conference among Afghans under the umbrella of the UN in Germany, Bonn, was organized by the UN to for the formation of the new government. One of the item in the agenda they decided was to reform the financial sector, including Central Bank of Afghanistan. And based on that decision, when the interim government came into existence, they took the initiative to start the reform agenda and implement that. Uh, the start point for the reform was how to reform the currency, because the currency which was in the country was in trillion in circulation, superinflation. Just for a small purchase in services, people had to carry big boxes with heavy weight, So it was almost impossible for availing the services and purchasing anything in the country because you had to get and on the side of this, as I said, no functioning banking sector. So everything is in cash. So people had to carry huge amount of cash to small petty things, small things. Uh, and then meanwhile, the infrastructure that needed for the reform was not there. So it was a very challenging job what to do. At that time, Afghanistan government had three options. Uh, and of course, in the reform agenda, the international community helped, including the IMF, World Bank, U.S. Treasury, U.S. Defense, and many other of the US institutions and experts from the international community across the globe were involved to see how can we can implement this agenda. How can we reform the financial sector, which started with the currency reformation. So there were three options on the table. One was should Afghanistan have a new currency?
Hmm.
In other words, should Afghanistan replace the currency because their currency is not working as a currency anymore? And then if we are going to have a new currency, this will take a long time. You have to have a consensus on what type of currency should we have, what symbol should it reflect, and then I mean there should be a process for the tender to print this currency, and many other logistic things in a process were involved, which were of course making it difficult to do this. The second option was. Should we temporarily go with any other currency which is dominant in the country and announce that is a medium of not a national currency, but somehow acceptable for the government to replace the national currency. Well, I mean, we had in mind maybe the US dollar, which was dominant at that time. Later that took function for a while, and maybe when a time comes, we have our new currency. And then the third idea was should we have a multi-currency market? Anyhow, the conclusion was the Afghan decided that no, currency is also one of the state identity. Like rest of the countries, Afghanistan should continue to have its own currency. And but then luckily here, when we looked and checked the records, we found out that the currency, the Taliban regime had primarily negotiated a printing of new currency with one of the international printing company, and some of the work was done, but the printing was not done because of the sanction of the UN sanction of the regime, and that company wasn't able to print for them. So, but the work was left, and then the government took the initiative from there, and they completed the remaining work, and we proceeded with printing new currency, replacing the existing one. With this initiative, the discussion was okay. Now, what should be what should be the conversion mechanism for the new currency? Should we call it new currency? Or should we, because to avoid the confusion among the people, because there is old currency, there is new currency coming. Should we call this one new currency? How to avoid the confusion among the people? And what exchange rate should we adopt? To what is the methodology for converting the new currency and bringing the old currency? How we destroy the old currency? So all this was extremely difficult job, but luckily, central bank was equipped with very qualified governor at that time. He handled it. In the meantime, the government support to the central bank fully committed, giving them extraordinary power, making it fully independent to do whatever is appropriate to implement the agenda. And finally, it was agreed that we should omit three zeros
Yeah.
uh, from the currency and introduce the new currency with the omission of the three zero. So this was a short brief, and then we can discuss on how
Yeah.
the process started, the three different type of the currency prevailing in the country, how that
Mm.
was managed. Yes, so this
Absolutely.
was the short how the monetary policy was functioning, and then the start of the new era for the monetary policy was with printing the new currency. But yes, interestingly, we also had to move and transition from the social-based economy into market-based economy. So we not only were having currency conversion, but we were switching our entire economic system from one economic system into another one. So this was also parallel going with the currency conversion.
Very enlightening, Hadawal. As you mentioned, before 2001, there were apparently three distinct versions of the Afghan currency circulating the economy. While one currency was issued by the central bank, there were at least two older denominated currencies issued by warlords in the north. And I think the system was primarily managed by local money market agents in Kabul and Kandahar, acting as informal mini clearing houses at the time. Even though you have talked about this in your previous response, Raval, but maybe briefly you can discuss this experience of the central bank in aligning these currencies into a single unit post the 2001 situation.
Yes, you are absolutely right. Unfortunately, during the Civil War, the government did not have the writ over entire country, and every warlord had his own territory, and he of course had some foreign supports, including the neighboring countries. And those
Right.
neighboring countries used to print money for them. So there
Mhm.
were three type of currency circulating in the country, or even probably four type. One was like the one the government inherited from the previous regime. In other words, the currency that Mujahideen inherited. And then Mujahideen during the Civil War, they had to finance their war. They printed a new banknote denomination of 10,000. So the 10,000 banknotes was introduced by the during the Mujahideen time, President Rabbani time. And then following with this, the warlords, a well-known warlords, one of them, Rashid Dostum, he printed for himself. And this was circulating in the north. Trillions of the currency was printing or were printed. And then also there were other warlords they printed, but fortunately those who were not circulated severely compared to those other currency that were circulating. So yes, there were different currency in circulating, but all this was a methodology was put uh, during the conversion that 1,000 three zeros were omitted from the Afghan currency. So 1,000 old banknote was equal to new one Afghani, And then this was for the government currency which was circulating. For those currency that the warlord issued, the government also decided to replace and exchange that. In the logic behind that was because people had those money, and they have genuinely and fairly they've got those, or they have gained those money in exchange of services or goods that they have sold. So the government decided to exchange that, but not with the same value what we were exchanging the government currency. This was in 50% of the government value. In other words, uh, one Afghani was equal to 2,000 of the warlord's currency. And this is
Right.
how it started. But this was only if the currency are circulating. And there were then, of course, government had their own licensed or registered people that they were bringing money. And then we had some statistic how much is circulating. So we were not exchanging fresh banknotes. There were some containers brought of the fresh containers, which the government did not accept that. But those were, of course, seized and then were destroyed.
So, were these currencies issued by warlords backed by gold or any precious metal, Hadawal, or they were just circulating freely without any backing
No, there was no
on the balance
backup.
sheet?
There was no backup, no central bank. This was just their. I mean, the territory that they were controlling
Hmm.
by force. Of course, people had no option. But if someone was denying it to accept, he was either put in prison or has been killed. Of course. So this was by their force, their pressure, and there was no backup. Not even institutions, nothing. They had to do. I mean, even their own currency was not coming out of those central bank branches in their provinces. They had kept those in their own vault, in their own storages that they had. So this was not coming. This was something they had they did by themselves with the support of certain countries.
Basically, the value was dependent on the supply side of the currency issuance.
Indeed, of
Yes.
course. Well, I mean, those people are not familiar
Mm.
of how the currency circulates in the market in terms of to make it a medium of exchange. I mean, they were using it as a medium for their war financing, for their illegitimate businesses, and
Right.
undue influences that they were using it over public. So yes, this is unfortunate we experienced in Afghanistan.
Very interesting, Rahul. You also talk about the omitting in early 02 and 03, the three zeros from your currency when the central bank, on the advice of the IMF, undertook currency reforms. Can you elaborate on this experience, Rahul?
Yes, as I said, one of the issue was not only the exchange rate, but the superinflation that country had,
Mm.
and people were not able to afford that anymore. In addition to this, when we were introducing new currency, we had in mind that Afghanistan is an import-based country, and we have to import everything from other countries. So, what exchange rate we should keep in mind in order to make the new currency affordable to the people of Afghanistan and to stabilize not only the exchange rate but also the price stability in the country and control and manage the inflation. We looked into other countries' experiences and we found that the Argentine at that time, Turkey, and many other countries had this experience of omitting zeros from their country, which was successful. So we did the same thing, and we omitted 30. And this was one of the idea where we also found out that this will help us to avoid the confusion among the new currency and old currency. So people
Right.
will have no confusion. Okay, new currency is coming. What we did, we said, okay, let's omit 30. It is like the same currency. We are just omitting 30s. We are issuing the new one, calling back the old one, giving
Hmm.
them new currency with the same name, with the same symbols, and then just removing the 30 and decreasing the quantity circulating in the country. So this is how we did, and we collected from the market, omitted 30, and at the end, around 40 billion was in total exchanged with the previous currencies, and then we had a one single currency in the entire country. Very successful, historic project, and of course, those who headed the governor at that time have the big credit for this this huge project. And then following that, we okay, now the currency is there and the exchange rate. We should have something above than the those country that we have a major trade with them, uh, like Pakistan, India, Iran, China. So this country were the major trade partner. So we thought Afghanistan current exchange rate, Afghanistan currency exchange rate should be higher than their currency to make the goods and services affordable to the people. And
Right.
that's at that time around 48 uh, uh, exchange rate against $1 was decided. And then when the conversion and the replacement period ended, we what we did now to manage the supply into the market, we and have a price stability in the country. The economic fundamentals, the variance that we had in mind for the issuance of the new currency was the economic growth and the inflation. So whatever economic growth and plus inflation Afghanistan has, that will be the base for the issuing the new currency to have the stability, the price stability in the country. And this is how we gradually proceeded. However, and interestingly, of course, we had a huge economic growth those days, but the demand was for Afghan currency much more than that because of the presence of the US forces, the NATO forces, the new diplomatic missions coming to Afghanistan, the Afghan itself, the diaspora that coming to Afghanistan. So that pump the demand, and central bank has to respond into that demand, giving the local currency. And these of foreign currency was all coming to the central bank account. So what we had in mind, if demand for the Afghan currency is much more than the economic growth and then the inflation, uh, in addition to the exchange rate stability, central bank should have market operation because that was the only tools available. So we designed that, and and the central bank decided to have a currency auction, calling the money from the market and selling the US dollar to keep the exchange rate stable, and also meanwhile responding to the demand of uh, those institutions and people asking for the Afghan currency.
After 2002, Hadawal, Afghanistan switched its entire economic system from social economy into a market economy and allowed private banks and foreign banks in the country. And you have extensively talked about this topic, given your experience in the banking sector. These reforms helped you build your reserves from $120 million to about $9 billion eventually. What was the thinking behind this evolution, Harawal, and was financial stability an important factor in this?
Yes, absolutely, no doubt. Well, there were three things parallel running at that time. One is you rightly mentioned, we were transitioning from social economy into a market economy. And the second was the central bank making a central bank independence not only from the government organ, from the executive branch, but also in terms of the structure wise, removing it from the umbrella of the Ministry of Finance and making an independent central bank, uh, both in terms of, as I said, structure and also in terms of the policy side. And then the second, developing the pillars for the financial sector so that the central bank fully functions. And we have a comprehensive monetary policy department to look into the price stability and exchange rate management. Not only that, but also to develop the financial sector. So with that idea, we developed two sets of the legislation for the banking sector. The central bank law, which we call it the Afghanistan Bank law, and the banking law. Banking law was for financial institutions, commercial banks, all financial institutions operating in Afghanistan, and the procedure, the mechanism for their licensing, for their registration, for their operation, for their liquidation, for their management, from life to the death of the financial institutions. We come up with a framework with the help of the IMF to develop the new era of the financial sector in Afghanistan. And then on the Afghanistan Bank law, on the central bank law, a structure for the central bank, independent from the Ministry of Finance, having its own board, the governor in charge of the management of the bank, of the central bank, the board responsible for the oversight of the entire function of the central bank. And then with that, moving not only from the state, from the social economy where the state was managing the financial institutions and also supervising the financial institution, but also the state was a services provider. So moving from that type of thinking that or ideology that was prevailing in the country, the social ideology, into a capital base was, of course, difficult task. So what we did, with the new introduction of the new legislation, we allowed foreign banks to come to Afghanistan. We allowed private sector to invest in Afghanistan banking sector. We put the frame work for the state-owned bank to convert and adjust themselves with the new standard of the commercial banking, moving from that old mentality of state-owned functioning where they have basic services. So in that time, a few banks were able to adjust themselves, like Milli Pashtani Bank, and rest of the banks were liquidated. So the new time for the private sector, private banks came to Afghanistan and foreign branches came to Afghanistan. We licensed them, and this was a new time for the new banks in Afghanistan. But of course, for again for building the reserve, as I mentioned, that the presence of the U.S. forces, NATO forces, and also the diplomatic missions in Afghanistan in the new era of the government created super demand in Afghanistan, and the inflow of the aids and the inflow of assistance were much higher than the economic activities in Afghanistan. So that inflow, of course, give us an opportunity to build up a foreign reserve for Afghanistan. And again, as I said, we were only responding, issuing the new currency based on the economic variance, and also responding into the demand of these institutions that I mentioned. But that was based on not on new issuance, but calling it from the market. So they were crediting our account for correspondent accounts in foreign countries, and we were paying them in Afghanistan. This is how the foreign reserve gradually built up, and we were able to end up in 2000 in 2021 around more than $9.2 billion foreign reserve were built. And when we started, we had around $120 million of foreign reserve in the correspondent accounts. Even those were blocked. But yes, this is in these 2 decades. This is along with functioning central bank, with a developed banking sector, and with a stable exchange rate, we were also able to build up a big portion of a foreign reserve for Afghanistan.
An incredible experience indeed, Hadawal. Just after 2001, the IMF defined the Afghan central bank as an empty shell, as there was little to no capacity in monetary management. That is, it lacked any monetary tools. How did the central bank manage to overcome these challenges over the years?
This was extremely challenging task for 2 reasons. One is, I said, whatever personal, whatever human resources Afghanistan had, those were trained based on the social economy, which is totally different in terms of the practice from the market economy. But in the new era, we introduced the market economy. We needed almost different skills and different approaches. So this was one of the difficult tasks. With the assistance of the international community, particularly the US, Afghanistan was able to transition this. We had also the World Bank helped on this, training the new personnel for Afghanistan Central Bank and bringing new talented capacity into the Central Bank of Afghanistan. So there was in early days not a management parallel to management, I mean, at the lower level, but of course we had a staff that were going under the training of these US and the World Bank and those who were helping us. And meanwhile, the Afghan who were educated in abroad, they came to Afghanistan, and that included me too, were hired by the USAID, by the World Bank, and the ADB, and is a consultant. And then they were introduced to the central bank to help the central bank. What the management at that time had in mind that gradually these new talent will replace the old personnel, and by the passage of the time, the new generation will took over the institution. That is exactly how it happened, because I was hired by the USAID and I came to the central bank and joined the central bank, and I ended up as an acting governor. So I mean that plan was implemented successfully, and this is how we were trained with building the financial sector, the banking sector, making central bank independent, fully functioning monetary policy, supervision, payment system, and also reserve management. Gradually, the personnel, the new generation were also trained, and when they were equipped, they were transferred into equipped with the new knowledge, with the new skills. They were handed over new responsibility of the central bank management.
Coming to price stability, Hadawal, before it became the primary mandate, inflation was a major problem for the Afghan economy, as it regularly eroded currency value and made it difficult for the central bank to manage its balance sheet. Uh, Keen to know your thoughts on this, since you mentioned earlier, Hadawal, that there was superinflation that was having debilitating impact on the economy.
Right. There's the superinflation was a big challenge, and this was due to the uncontrolled issuance of the currency in the country, uh, and non-existence of fully functioning monetary policy, which led into a super inflation. What we did was not only, as I said, introducing and replacing the new currency, which stabilized the exchange rate, decreased the volume of the currency circulating in the country, but also had impact on the purchasing power of the people, because we omitted three zeros, I mentioned. We determined the exchange rate much higher than the trading partner, and then we continue to keep that exchange rate stable with the support of the foreign currency pumping into the market through the market operation, uh, and uh, and this helped us to move gradually in building, developing other pillars like licensing new banks, non-bank financial institutions, microfinance, and also we were able to introduce the central bank owned bonds to the market, but this was primarily the start to not to the secondary market, only to the financial institutions, because we had in mind that we will to move gradually from into a system-based monetary policy, rather than just into be dependent on the market, on the market operation, auctioning currency. So the inflation was an outcome of a different pillar that we introduced, and this helped us to maintain that.
During the regime change, Hadawal, what were the challenges that you faced in terms of financing or running the economy, and how did you manage it? You can particularly talk about how the central bank refrained from the government's deficit financing for the sake of macro stability. In the context of the previous regime's automatic overdraft financing facility, resulting in significant inflationary pressures faced by the economy.
Well, interesting. Comparing
Mm.
the two regimes, uh, the new government when was formed under the umbrella of the UN. In the previous regime, which witnessed the civil war and printing a huge quantity of the new banknotes, the 10,000 denomination, and many other
Mm.
currency that were printed. The new government had an advantage of not only support of the international community, but also the recognition that they received from the international community, helped the Afghan government to refrain from from intervening in the function of the central bank. In other words, asking the central bank to finance their budget, because the international assistance, the donor country, they pledged Afghanistan to continue funding the national budget till that Afghanistan stand on its own feet. So that was an opportunity for the central bank to build itself, because the government was not pressurizing for the financing their budget. That's one thing. The second thing was that the government had commitment to the international community in exchange of what assistance the government was receiving. Of course, this was in exchange of the promises that the government was making to make some reform in Afghanistan. And one of the commitment they were giving, that they will keep the central bank independent. They will not intervene. So in the donor country, including the UN, were helping the government funding the national budget. So that also helped us to keep the central bank independent and follow our objective of independent monetary policy to keep the price stability. The third thing, which was more important than these two, was public pressure. In the confidence the public lost over the central bank in the past. So public did not want to see the same practice continue, because this was a new era. They saw that, okay, the central bank was printing money before, uncontrolled print. Why the people should trust the central bank bringing the new currency or other currency and continue with that trust? There should be something showing or evidencing that this is a new era and there is a new contract among the public and the central bank, and the central bank will keep its promise, honor its promise to keep the interest of the people. In other words, to save wealth of the people and independent from the government. And that pressure helped us to convince and to pursue our agenda with the government. There were instances where government has tried knowingly or unknowingly to intervene, and then we said, no, it's not possible. Like in one instance where we were called to the cabinet, when we were asked if they can get some amount from the foreign reserve to purchase some to finance government project from the foreign reserve of the central bank. And when we said that's not possible because we cannot do that. We have given this commitment. This is against the new legislation, the new rule. And President Karzai at that time was very, very supportive, and he was in our favor. And then the cabinet decided, okay, well, let's not touch the reserve of the central bank, leave them to do their own job. We will find other resources. So this is how we managed, and this is how we were different from the previous regime that they had multiple currency, printing a new currency. So because we had a criteria, we had standard how the new currency will be issued into the market, what should be the criteria, and what is our commitment with the international community, with the people of Afghanistan, and also with the government of Afghanistan, an independent central bank. So we had challenges. We had in the lower level many instances where we had to fight with the institutions and telling them we're independent, because, as I said, we had a social economy. And the state was built on that concept. So the institutions, the other institution, had their mentality from that concept of the system, and they were intervening in many instances, like even coming for the government auditors coming or want to audit the central bank, things like that, which we stood and we resisted and we succeeded on that. And in 2020, before that, the central bank was somehow acceptable to the other institution as an independent from the executive branch. Before that, it was a little difficult and it took us some time to convince the not only the government but also the institutions and the people working in these other institutions. So yeah, this is how we manage between the previous regime and then moving towards the transition into the market-based economy and make it independent central bank.
Since the Afghan economy has always been excessively dollarized, offering significant convenience to policymakers, was the conscious decision to have a managed float instead of a fixed exchange rate that you mentioned earlier, Harawal, difficult for the central bank?
It was very difficult. It's still very difficult. I mean, fixed exchange rate, of course, require a lot of resources, particularly support of a foreign currency
Mhm.
to not only to do your settlement of the accounts of your trade, but also to manage the market and stabilize it. That require a lot of foreign currency resources. Yes, we did have those resources at the early stages, but this was not our own resources. This was not generated from our resources. This was temporary. We knew this is not natural, and by the passage of time, this will go away. So we did not want to attach our monetary policy with unnatural resources, which will gradually move away, and then again we will have no option but we either the I mean the currency, the exchange rate will face a super volatility, and people will pay for the damage they've paid in the past. So the best idea was, okay, what is available is uh, to keep the exchange rate stable, uh, adjust it gradually with the quantity of the export that Afghanistan is doing, or in other words, with the to the extent that Afghanistan economy domestic production is coming up, and then we let it gradually adjust itself, but manage it their exchange rate with the help of the foreign currency that we have intervening in the market. This is how we come up with the idea of managed floating exchange rate rather than just freely or just a free floating exchange rate. We said, okay, we should have a managed floating exchange rate, but adjustable gradually with the domestic production, so that we also give some space to the domestic product to compete in the market. And this is how we lift it. Uh, but meanwhile, well, we had a plan to develop as I mentioned earlier at the beginning, we had a plan to develop those fundamental pillars needed for the fully function of the monetary policy. Unfortunately, I mean that's a long way to do, but of course there were some hurdles that what we had in mind we couldn't do, but we planned to do it. And unfortunately, those were we did not succeed on that part. In other words, we still continue to stabilize the currency with the help of the foreign currency, which is not natural. It's unnatural exchange rate. We wanted to move from this one, have this exchange rate based on institutional support, based on the system support, which is capital market, equity market, um, stock exchange, money market, government securities, secondary market development. Unfortunately, that did not happen. But of course, the framework is there. It's not anymore that difficult as it used to be in the 2001 and 2. The fundamentals are there. I think when the time comes up, we will be able to develop these institutions, make it comprehensive financial sector to support the monetary policy and stable exchange rate, and then gradually move on into increasing the independence of economic of Afghanistan from the dependency. Well, I'm optimistic the time will come.
Talking about the current scenario, Hadawal, one interesting trend that I see is in exchange rate. Apparently, USD Afghan was trading above 100 in 2021 and has now reached around 65. What were the driving factors appreciating the domestic currency, in your opinion?
Well, interesting question.
Hmm.
And it's I'm sure our audience will realize this because we have explained this the history of the monetary policy and the currency in
Right.
Afghanistan.
Hmm.
Exactly the same thing what happened in 1992 when the regime changed and Mujahideen came, and then the civil war started. A new time of Afghan financial sector, superinflation, new currencies, multiple currencies in Afghanistan. All this resulted into superinflation and currency lost its value. So in 2021, when the republic collapsed and again the Taliban took over, people had in mind their president and they thought, well, something is going to happen. So the demand they had for Afghani, there was they decreased drastically, and there was a huge flow of the Afghan currency into the market because people said, well, everything is gone. This currency was issued by the previous regime. It may not continue. Even if it continue, the new regime will issue much more currency because there will be again civil war, and all these predictions were there. So the currency started depreciating drastically. Uh, at that time, I mean, the only access we had was a Twitter, the social media. I tweeted at that time the same thing. I said, well, let's not create a panic. If the Taliban continue implementing monetary policy the same way that we lived, the currency is not going to face the consequences that it faced during 1992. It will be stabilized. The exchange rate will not depreciate longer, so it will adjust itself. And by the passage of time, we exactly saw their trend. That the good thing about them was that they remained committed to the monetary policy. Independence, and they did not intervene till now. We are discussing they've let the central bank and the monetary policy to proceed to what we they inherited, and this is how the currency came back into its original position, even much better because it has its own factor again. Those demands that we discussed, the US forces, the NATO, and the diplomatic missions, all those are not anymore in Afghanistan. So there is a
Right.
decrease in demand. And meanwhile, the central bank continued to function with the objective of keeping the price stability in the exchange rate, and they continue to intervene in the market, pumping foreign currency, calling back the currency, the extra supply. So the currency is the exchange rate came back into stability and it stabilized. This is how it impacted after I mean, that big jump was just because people feared, people were scared that it may face again the same consequences that the currency witnessed in 1992. And luckily, it did not happen.
Well, that clears things, Hadawal. Very interestingly explained. Also, the Afghan trade deficit has reached $0.91 billion dollars by the end of 25. The wider trade deficit is especially witnessed after the conflict with Pakistan recently. How concerning is the trade deficit in your opinion, and how will it be funded as foreign reserves seem sufficient at around $6 billion dollars?
Uh, Again, let's just we can see this from three angles. One is the trade deficit, as I said, we continue to have a trade deficit.
Mm,
We will continue to have it. But the of course the payment, we were surplus on that, on the payment, in the past years, and we were able to settle the accounts. But with this surplus, with settling our account, a major portion of settlement of the trade were based on the cash, that were moving between Afghanistan and the neighboring countries. As I said in my early discussion, that that our major trade partner are our neighboring countries. So, and because of the civil war, Afghans were migrated into these, in the neighboring countries mostly. So now they have connections. They have built up their trust of settling the account between the traders in an informal way. In other words, not going
mm,
through the channel of the banking sector. So the cash is playing a bigger role in that. So the deficit we are discussing is a part that coming up from the statistics of the formal transaction. So it is a concern because it's an informal settlement, but it will not create a big hurdles for the payment part. They will be able to clear that. Along with this, we still have that informal channels of the hawala
mm.
functioning in
Right.
Afghanistan. So, of course, the trade deficit is there. The payment deficit is still not there. Central bank, although at this stage, if we continue with the Taliban regime, they are disconnected from the world financial sector, from the global financial sector. They are not being able to do the settlement for the trade because they don't have correspondent accounts. They are not going. They're not routed through New York. The dollar clearing is stopped for them. They do have some regional clearances on the individual basis. The banks have their accounts, but those are not commonly used correspondent banks for the clearing of the trade accounts. So the trade deficit, of course, we heard that it will continue on the payment to Afghanistan. I mean, Afghanistan do have the resources, and it will continue because the one big portion of the foreign currency now, not replacing the donor funding or the US that they were sending to Afghanistan, but of course there is a huge increase of a portion from the Afghan diaspora. They are sending money to the Afghan, in particular after the collapse. I mean, it's a huge number of millions of Afghans left Afghanistan. Of course, they are sending back home remittances. So remittances play now a big portion. Uh, but definitely, if we don't focus and if we don't function as a state, it is a big concern because this will not continue long.
So even though not much statistics is available as far as capital flows are concerned, Hadawal, but in your opinion, would Afghanistan still enjoy a capital account surplus, given the fact that, as you just mentioned, dollar clearance is a problem and foreign aid money is now slowing down?
Well, there's two things. as I said, one is if a state is functioning and the government has a trade relationship not only with neighboring but with the international community, then I mean, of course, you have statistics and you can predict because the economic prediction is always on the numbers. But
Right.
if the numbers are not available, of course, you cannot predict.
Mm,
What at this stage we have is that Afghanistan is unfortunately isolated from the world. There is no data at this stage.
right.
But with all this, with all this, uh, even the aids that the donor assistance that was coming to Afghanistan has stopped. There is a assistance coming to Afghanistan in the form of a physical cash moving into Afghanistan from the US, the donors, particularly the UN, the World Bank limited, but the UN broadly, the humanitarian assistance that they are doing is not going through the banking channel. It's going through um, they are sending cash to Afghanistan. So the problem here is now, if we predict on the current account, that is not on the figure, on the
Right.
real figures that currently, I mean, currently we have in the situation prevailing in Afghanistan, because you see. I discussed that with you in our earlier discussion that interestingly, some models economic models in Afghanistan are not working because not all those fundamental needed for the model to put in practice, and then you see the result are available. Such as in this case, uh, physical cash going to Afghanistan through from the UN to help the Afghan economy, humanitarian assistance, but not going through the banking account, not going to
Right.
the Afghanistan institutions where you
Mm,
can you can judge the deficits in the surplus of the current account and also the reserve management in other. So these are not available. We will have this to see once this recognition and the legitimacy of the Afghanistan government is backed, then we will have all those data. But yes, mm, Afghanistan trade deficits will continue. Current account uh, is mostly based on the assistance we were receiving from the foreign countries, from the donors, and was not based on the domestic production.
Taking the discussion forward, higher political instability in the regional economies, primarily Iran and Pakistan, seems to be a geopolitical risk for Afghanistan. How will this impact the country's trade with its immediate neighbors? You did talk about this, but maybe you can give some more detail on this.
No, it is very important because
Mm,
we did talk about Afghanistan economy based on import. Afghanistan
mm,
does not have domestic production
yeah.
to respond into the needs of the people. So we are based on the import, and we did talk that the trade partner are mostly the neighboring countries. So of course the geopolitical changes in the region, particularly in Pakistan, in Afghanistan, in Iran, has a direct impact not only on the trade but on the livelihood of the Afghans. There is no doubt because things that coming, we have trade with Pakistan. It's not only of what we are importing from Pakistan. There is around more than 2 billion trade imports goods importing from Pakistan. And the recent data, we had a big portion, but it's gradually decreased. But we are also using Pakistan mm, uh, port for other countries to access. So whatever trade we are doing with the rest of the country, we're using Pakistani ports. So there is two trade or two-way relationship we have with Pakistan. One trade to trade direct settlement of account and in everything that I discuss, and then the other one is that we are using their port. Same is with Iran. Is the same thing. We are using mostly Pakistan, but Iran, and then we are using two ports from the Iran. One mostly for trade with India, because we also have a big portion of our trade with India, and there is always, of course, political instability and political tension between India and Pakistan, which disturb that relationship of trade between Afghanistan and Pakistan. Whenever we also when we have a problem, an issue with Pakistan, the trade is also always disturbed. Oh, this is in addition to the international tension and disturbances politically that they have for Pakistan in Iran. So yes, it will have direct impact on Afghanistan on the import and also on the export. Uh, there are some alternative routes which are very costly, but they are not long lasting. I mean, Central Asia, but not everything can come from Central Asia.
Right.
And not everything can do. I mean, there is so much similarity between the Afghan production and the Central Asian production, because our major production at the moment is agriculture. Central Asians are much better and in terms of the quantity in producing the agriculture. So, yeah, it does have impact on Afghanistan. It will have a big
Right.
impact on.
The governor of the Afghanistan Bank has highlighted price stability as being a major challenge recently, Hadawal. How is the central bank addressing this situation, in your opinion?
Look, in a country like Afghanistan, where financial sector is not developed, monetary policy is not fully function, and then the government itself is isolated, is not recognized. Their clearing accounts, their settlement accounts, their trade relationship are either limited or at zero level. Uh,
Mm.
and then the country itself is dependent on import, and you have you have a tension with your neighboring countries. Of course, the price stability will be an issue.
Right.
Uh, and it is not only in such situation, central bank alone cannot do anything. So central bank needs help of other institutions to stabilize the prices. It is the Ministry of Commerce, it's the Ministry of Agriculture, it's the Foreign Ministry, many other factors works in the price stability. Not only those tools, I mean, those tools have to be fully functional, and and functioning of those tools are dependent on other factors of the financial institutions, of the trade relationship, of the export and import, of the settlement of the accounts. These are affected, unfortunately. So his concern on the price stability is, I think, is oriented from those from the thinking of those capacity that we left behind, because they are developing reports, giving and sharing it, giving them idea. This is the situation, is the predictability. So yes, the price stability is an issue. Although at this stage it is somehow not in a double digit. It's not an issue, the inflation, but I mean it cannot continue longer if the situation is as it is. So it has to change. Otherwise, they will not be able not only to manage will not be able to manage the price stability, but the entire economy will collapse gradually.
Related, the first Deputy Governor, Hadawal, also urged the commercial banks to give special attention to expanding financial inclusion by implementing innovative digital solutions under prescribed guidelines, so that all segments of society can benefit from safe, fast, and efficient electronic financial services, as we like to call it. How is the central bank, in your opinion, going to implement financial inclusion in a country as diverse and informal as Afghanistan?
Well, let me share with you for
Mm,
financial inclusion in Afghanistan. Uh, when I was the first deputy governor and acting governor, we did a study of
mm,
looking into Afghanistan geopolitical location, and also considering the factor of expanding the financial services, making the country banked. We realized the infrastructure development in Afghanistan will take much longer time.
mm,
So, what is the shortest solution to service the people, to service the institutions in terms of the banking, in terms of the financial services? So, we saw some similarity of Afghanistan in terms of the culture, tradition, in terms of the attitude, behavior of the people with the India, and also and then the system working in Kenya. So we realize, okay, well, I think we for the financial inclusion, we can go for mobile payments or mobile payment services, uh, not only limiting to date, but we can also introduce somehow uh, a similar mechanism of financial inclusion of Aadhaar, what India has done. So we had
right.
that concept also in mind, and we developed that strategy of 5 years of developing the
Mm,
financial of doing the financial inclusion. And we started with money services, with the mobile money services provider. We linked that with the mobile networks, with the GCM networks operating in Afghanistan, five networks. And then we also linked developed our KYC in money laundering regimes, in making the population banked uh, based on the concept of the Aadhaar. We had that study of we had so much interaction with the Indian government on that part. So
mm,
probably his idea of saying the financial inclusion comes up of the same mentality that okay, it is difficult to bank the country with the physical infrastructure. It will be good to have a financial inclusion and moving to digitalization to make that financial inclusion practical. This is something critical for the development of Afghanistan banking sector, looking into Afghanistan country landscape, into also people behavior and attitude and culture. So digital in financial inclusion is making it easier and accessible. But again, however, the, this doesn't work when you are isolated from the global financial sector. The
right.
the biggest factor in financial inclusion is that you are linked globally, that you are able to remit globally, that you are able to settle globally, that you are sitting in a far remote area of your country, but you are accessing New York, you are accessing London Stock Exchange, you are accessing any part of the global trade. If, if you are isolated, I mean, internal digitalization or financial inclusion have no logic. So they have
Right.
to do that comprehensive. But yes,
Finally,
particularly
had yeah,
on the
yes.
Islamic banking, this will boost the economy also if they do it. But they have to link those all those dots, bring the pillars, develop some of the The not some, but most of the pillars they're not developed. For financial inclusion, you have to have all those pillars developed first. Otherwise, limited financial inclusion. I mean, financial inclusion can't be just basic with the basic services of the bank, opening account, closing account. These are not the financial inclusion. You have to have a range of services in the financial inclusion.
Very interesting, Harav. Finally, in a recent monetary policy report, it was highlighted that the central bank is focusing on diversifying the economy. This is perhaps related to the last question, Raval. How are you going to expand to new sectors going ahead? Any strategies that you can shed some light on?
One of the failure, I think, in my view, one of the failure of the Afghan government in these previous 2 decades was that they were not able to identify what sector is making Afghanistan self-dependent.
Hmm.
In other words, what sector we should focus on so that we build upon that and Afghanistan become economically independent.
Right.
This study was not done. Uh, are we going to make Afghanistan self-reliant, industrialized country, or we making it a services country, or we making it agriculture country? What is the basic independence economic model for Afghanistan? I mean, we didn't have a concrete plan to follow that, because once you have a national plan for economic independence and you follow that model, all the institutions have to align themselves in their strategic plans with that national plan, so that make the country economically independent. Now, diversifying the trade is really good model. And it's a critical step that Afghanistan is needing. They should diversify that, but but they should not keep that limited into just saying, okay, let's make it a mixture of the trade, a mixture of the production. No, they have to prioritize that. They have to classify that. Okay, what is your first priority? That all the institutions, including the financial sector, should focus and and help each other, support each other to follow that goal, which I think could be the industrialized. Could be can Afghanistan be an industrialized country based on the mining extractions, because that's the biggest the biggest reserves Afghanistan has, and that's I think the biggest available source with Afghanistan that can make Afghanistan economy independent, because trillions of dollars have been surveyed or lying under the grounds in Afghanistan. So,
Right.
I mean, they have to fall, but they have to be again. They this is not something to this is not something to auction. You have to do this based on a system. You have to be very transparent, accountable, and you have to have a system for this. So diversity of trade for Afghanistan do have a capacity to diversify the trade. Uh,
Right.
30% agriculture industry, the capacity for the services, the capacity for the for linking the Central Asia between between the subcontinent and then the developing the routes, logistic, the transportation. So there is huge capacity for diversifying that.
Hmm.
But with all that, I'm adding to this is classify that diversification. If you don't classify the diversification and you don't put the priority of what is the economic model for Afghanistan, it will end up with the same what we end up in 2 decades.
So that uh, probably means that infrastructure financing is probably the next evolution for the Afghan economy. And I think the central bank would have to play an important role in that going forward.
Yes, and that
Mm.
is where we can, I mean, there's just a small portion.
Yeah,
That's where you can build up your independent central
capacities.
capacity.
Absolutely.
You will have an independent central bank because you will have resources what is needed for the independent central bank. When I say as independent central bank, it includes the development of the financial sector, having all the pillars of the financial sector, your continuity of your surplus of the not only of the current account of the reserve management, but the exchange rate stability, the price stability. So this is how countries have developed. And But if you don't identify the driving force of making your economy independent, you will not be able to function fully economic independent state.
Very interesting, Hadawal. Well, on that note, that's all I have for today. Hadawal, as always, it's a pleasure speaking with you. And once again, thank you very much for the time.
Well, thank you very much, Karan, for having me. And interestingly, I think this is the first postcard that we had on Afghanistan Central
Yes.
Bank
Mm,
in the banking
mm.
sector. Probably not. We had the first. Probably this is the first one on the in the history of the Afghanistan banking sector and the financial sector, including independent central bank, new central bank. So we never had this one before. The USID had one documentary on the banking sector including monetary policy, but
Right.
not this one. This is the first in the history. Thank you for making it possible.
The pleasure was all mine, Hadawal. Thank you very much for the time.